It's good to ask questions. Asking questions gets us thinking about what the answers may be or what they could be, the possibilities. And that typically makes us want to find out. That, of course, takes a bit of research. In fact, it was asking questions and doing the research that got me to where I am right now. Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years, I've focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. It is said that lies need constant protection because if you pick at it, it'll fall apart. But the truth remains the truth no matter how much one tries to tear it apart. Now let's play a little game of what if. So, what if you could earn the kind of high interest on your savings as the banks do? Not as the banks pay, I mean savings in a safe, protected, guaranteed account. You might say, well, that's impossible. I remember back in the 1980s, the average interest paid by banks to savings accounts was between 3 and 5%, which sounds huge right now. The banks were charging 10 to 15% on the loans to customers. Of course, they bore the risk that the customers might default and might not pay the loans back. I remember thinking, I wish I could get 10% interest somewhere, but that kind of interest is reserved only for millionaires. Little did I know that at that same time, there was a safe, protected savings account available outside the banks that the banks use that were also available to individuals and not reserved just for millionaires that were paying, get this, 12% annual compounding interest. Not that many people knew about those special savings accounts. Currently, banks are paying what? A fraction of 1% to savings accounts? They're still charging 6 to 15% on their loans. And guess what? Those special, nearly secret saving accounts are currently paying 6% annual compounding interest. Okay, I know you want to know how you can get one of those special secret high interest savings accounts, and I will get to that in a bit. But first, what if you could double the power of your money just by putting it into one of those special savings accounts? What? That can't be possible, you say. Well, what if you could keep your money in that high interest earning account and at the same time use it to pay your bills or pay your taxes or invest in real estate or your business? Oh, and the interest earned on your savings is tax-free. Well, that would be doubling the power of your money now, wouldn't it? No way, you say. Impossible. But guess what? The reason you believe that it's impossible is because of the lies you've been told about what is the best way for you to handle your finances. Just do a little digging and those lies fall apart. And where do those lies come from? Big finance, i.e. the banking institutions and Wall Street. And now this will blow your mind. Have you ever heard of BOLI? That's B-O-L-I, BOLI. It stands for bank-owned life insurance. So what does that have to do with anything, you ask? Well, banks typically have somewhere around 15% of their liquid cash invested in bank-owned life insurance. It's so common that there's that acronym for it, BOLI. But why do banks put so much of their money into bank-owned life insurance? Because it's the safest, best protected, guaranteed place to earn high compounding interest tax-free. No, you can't invest in BOLI unless you own a bank, but you can generate a high compounding tax-free interest earning saving account in a properly designed participating whole life insurance policy. And yes, you can use that money for an unlimited number of things, while at the same time, it continues to earn high compounding interest. How? You simply leverage the money in the account by means of policy loans. Oop, I know I lost some of you there. You heard, I have to borrow my own money? No, you don't borrow your own money. You leverage your money and borrow the insurance company's money. Well, what's the difference? Remember I said these accounts are participating? That means that the companies offering these accounts are mutual companies owned by the policy holders. So the company is beholden to you, the policyholder. They don't have regular stockholders that they have to answer to. They answer to their policy holding company owners. And that means they want to make sure you are happy and profiting. So the interest they charge for the policy loans are at a lower rate and simple interest than the high compounding interest they pay you on your account. Think of it this way. You have $1,000 in your account earning 6% compounding interest. That's $60 a year in interest. Let's say you leverage the whole $1,000. So basically it's gone. It's not gone. It's still in your account earning that interest. So even though you spent the money, you still earned $60 tax-free, and that's compounding. So the next year, as you put another $1,000 into your account, you earn another $60 on that $1,000. But hold on a minute. The original $1,000 plus the 60 tax-free interest is still in there. So you not only earn the interest on the $1,000 you added, but you earn interest on the original $1,000 again, and the $60 of interest you earned last year. That means you actually earn $123.60. It's compounding. And that's true even if you leverage all of the $1,000 you add the second year. That's free money, and it's tax-free money. Where else and in what other way can this be done? Well, I'll tell you where and how. Nowhere and know how. Now, we've only asked 3 what ifs. So let's ask another one. What if you've been using this wonderful leveraging strategy, which is basically what infinite banking is all about, to purchase inventory or supplies for your business? By now, time's passed, been doing this for a while, you've accumulated $100,000 in your secret infinite banking account. And now the worst thing possible happens, and your only out is to declare bankruptcy. Guess what? All that money you've been leveraging in your secret infinite banking account, completely off limits to the bankruptcy court. The same would be true if you were to be sued or defaulted on your taxes. That money is off limits. No one can touch it but you. How's that for safe and protected? Now, what if you could grow a savings account that you could tap into for retirement income that you would not have to pay taxes on when you take the money from it. And you could take as much or as little as you want, when you want. The only other account that you can take tax-free income from in retirement is a Roth IRA. But those come with minimum required distributions. So you don't really have the same control at all. And you're limited to how much you can put into those accounts each year. And it's a pretty small limit, actually. Now, I don't know about you, but for me, this is exciting stuff. And these accounts really are available to just about everyone. There is a caveat, however. Not just any whole life policy meets the requirements for these special infinite banking accounts. First, the account needs to be set up with a mutual insurance company that has a non-direct recognition policy for their policy loans. And then the account needs to be designed with special components that contribute to and accelerate the cash value growth. Unfortunately, most insurance agents have no idea how to design these accounts properly for maximum advantage to the client. On top of that, when these accounts are designed properly, the agent gets their commission cut by around 70%. So you can imagine not that many agents are all that motivated to work with the proper designs. So here's what you should do right now. Watch our free 60-minute webinar, Become Master of Your Financial World. The link is in the description box below here. That'll give you a proper overview of infinite banking, why it's so powerful, and how you will benefit by using the strategy. And then schedule a call with me on my Calendly page so I can answer your questions. And together, we can determine if infinite banking is a good fit for your particular situation. The link to my Calendly page is also in the description box. Or you can send me an email directly and we can take it from there. My email address is also in the description box. You know, there's an ancient proverb that says, the best time to plant a tree is 20 years ago. The next best time is now. So yes, it would have been better if you had got started with this years ago, but don't wait any longer. Get going on it now. If you found this video to be helpful, please like the video and subscribe to this channel. Also, please post your questions and comments here. Then go watch that webinar and let's get your infinite banking and tax-free cash growth warehouse account going. We're here to help, and we look forward to helping you.